Alrighty. Screen 2. All right. So this is Trading View. And let's take a look at the economic calendar. Again, we had a lot of economic activity last week with the election and with the Feds speaking. So this week, I'm hoping that it's a bit milder. Last week was a roller coaster ride that ended positive, but still have to watch out for things moving this week because we still are in earnest territory. So let's see what do we have on the economic calendar. So, all right, let me scroll up. All right, so Monday, no major reports. Tuesday, no major reports. Wednesday, we do have inflation readings. You can see we have the core inflation rate month over month and core inflation rate year over year. So if you don't know how these can drive the market, the Feds, who pretty much controls the money supply for us, they need these readings to determine how big of a rate cut we get next time. So last time, before last week, we had a 0.5 rate cut, which I thought was a nice sizable rate cut. This time we got a 0.25. Now people are wondering what is going to be the next rate cut. Do we get another 0.25? Do they hold strong at 0.25, or do they go back up to 0.50, depending on the information that they're getting from these reports? So these reports are going to be pretty important. They're also going to drive the market. If the numbers come out well, the market's going to go up. If the numbers come out bad, the market's going to pull back. So Wednesday, especially for my option traders, yep, that's also a thing. We could skip over a cut, but I haven't heard that just yet. But that's something that we want to pay attention to. That's a really good point. So Wednesday, for people who are trading options, you may want to circle this day on the calendar. This report comes out at 8:30 a.m. The market opens at 9 o'clock. The reason why you may want to watch this is because, again, this could drive the market one way or another. And if you have a short date on your option, you could get stuck in a bad trade. Thursday, we do have PPI, and then we have Jerome Powell speaking as well. And I think that could be something interesting as well. So last week we had Jerome Powell speak, but he was speaking at the Fed conference, which, he's supposed to speak there. But this time, let me see, does it tell us what he's speaking about? Nope. This time it doesn't tell us what he's going to be speaking about. So anytime Jerome Powell, for my new people, anytime you see that Jerome Powell is speaking, you have to keep an eye on it. Jerome Powell has, anytime he's spoken in the last, I would say 12 months, let's say if he's speaking at 2 o'clock Eastern Standard, at 1 p.m., the market will start to sell off because Jerome Powell, again, he's the Fed chairman, and you never know what he's going to say. And if he sways one way or another, it can push the market up or it can tank the market and make it pull back. So Thursday is another day. So pretty much it looks like Monday and Tuesday are clean, smooth trading days. And then Wednesday and Thursday, you want to watch out for these reports. So you got a PPI report, which is another type of inflation report. And then you have the core inflation rate on Wednesday, but then you also have Jerome Powell on Thursday. So we should expect some volatility towards the end of the week. And then on Friday, we do have retail sales, but I don't think that this should cause too much ruckus in the market because it hasn't in the past, in my opinion. Do I have any questions about what we're looking at now? Let me check the chat here. Oh yeah, we're all saying that we might not have another cut. Yeah, that's possible. They could pause the cuts depending upon the inflation information that's coming out this week. All right. It seems like I don't have anyone asking any questions. All right, cool. Lowering rates may be inflationary. Yep. They could cause a spike in inflation as well if they lower the rates too fast. So I agree with you there, Ross. All right. Let's do an indicator breakdown. We haven't done one of those in a while. Normally well, I said normally, but in the past we've been covering different topics. But we have a few new people in here, so let's touch on some indicators. And I'm still testing the indicators that we talked about last week, being the ATR indicator and the way to use it, and also using these different types of candles, which they're the Heikin-Ashi candles for those that are interested. But yeah, all right. So let's start from the top, and we're going to run through to the bottom. We're not going to take too much time doing this because we've done this a million times in the past. But again, I want to do this better for my newer people. All right. So we're looking at the S&P 500. This is the SPY, one of my favorite stocks. I think this is when people come to me and ask, what should be my first stock? I'm going to say the SPY, especially as a stock to hold. But then also, if you're going into options and day trading, I think that the SPY is a good stock for options and day trading as well as holding. That's why I say I think that, again, hands down, the SPY may be the best stock because of the different, I guess, the different sort of options that you have with it, with how you want to trade. And as you grow as a trader, it always has something for you. But yeah, this is the SPY. We're looking at it on the daily. And at the top, we're looking at the RSI. This is my first indicator. So the RSI is real simple. It stands for the Relative Strength Index. This indicator pretty much tells you if a stock is oversold or overbought. So if a stock is oversold, meaning that people are selling it too much, the reading that you're going to get on this side should be low, right? Oversold means low in this purple area, low on the purple graph. So oversold, like for instance, we had an oversold situation here where the RSI went all the way down to 25. And then we had another one back here where it went down to about 29. So that's over. So overbought is going to be anything above the top in this purple, which is above 70. So right now we have an RSI at 72 and it is overbought. So when a stock is overbought, in my opinion, I do not buy overbought stocks. If I buy overbought stocks, that means that I'm running the risk of them pulling back or selling off. You can see anytime we've reached 70 or above, we have these sharp pullbacks that are being built up. So you can see the stock in this area ran up to 70 on the RSI, and then it pulled back to 54. You can see in this area where it ran above 70 to actually 80, but then we had a really sharp pullback. This time it ran all the way up to 85, extremely sharp pullback, all the way down to 53. These few times here to where it broke above 70, again, we're having sharp pullbacks. And this time that we're at 72, we could have another sharp pullback to place us back in the purple area. Now, when using the RSI, what I like to see is 45 to 55 at this purple number, and I like to see it pointing up. So at one point, this was at 45 to 55, which was down in this range, pointing up. And that would have been nice for a trade to take the stock up to being overbought at 70. So again, the way that I like to use it is find a stock, make sure this number is 45 to 55, make sure that the RSI is actually increasing to the upside, and then I hop in around 45 to 55, and then I hop out around 65, 70. That's the easiest way that I found to use the RSI on the daily. Now, there's different ways to use the RSI, but I think, again, for swing trading, options, or shares, I think that's one of the easiest ways. Ty?
So that dotted line is where the 70 is. So you're watching it approach that dotted line, right? That's the key marker, those dotted lines.
Yeah. The top dotted line is 70, the middle is 50, the bottom is 30.
Okay. And so you like 45 to 55. What if it's at like 60 or 65? Are you cautious there or no?
Yeah, I'm cautious there on the daily, but then if it's getting close to maxing out on the daily, I may switch my chart over to the weekly to see what's the reading on the weekly.
And when you look at daily, you don't look at daily and then minutes too. You just do daily.
Yeah, no, that's too wide of a gap as far as charts. Like when I'm looking at daily, I'm looking at the 4-hour, the daily chart, and maybe the weekly, depending on what I'm trying to find. But if I'm looking at the daily chart, I'm not going all the way down to the minute chart because that's way too many candles on the minute chart to equal a day.
Okay.
Does that help you, Ty?
Yes.
All right, cool. Great question. Any other questions about the RSI?
Yes. Sorry.
Oh, David, go ahead.
Yeah. You said when you're looking to get in, it's around the 45 to 50, right?
Yeah, 45 to 55 pointing up. Yes.
Okay. All right. Thank you.
No problem. Cool. Great questions. Any other questions?
Yeah, I have a question.
Yeah. Go ahead.
So wait, what if the 45 to 50 doesn't plan out as you intended to be? Because sometimes the stock does move. Most of it's not guaranteed. You get what I'm saying?
So yeah, I get exactly what you're saying. So the RSI, you can't trade off of it alone. Like you can't look at the SPY at 598 and then look at the RSI only to dictate if you need to get in the trade or not. This is just one of the mechanisms that I think you should check before you hop in a trade. So the way that I look at it is having a checklist, and I can put a check mark by the indicators that are in the green for me. So if I look at the RSI and it's between 45 and 55 pointing up, I can give that a check mark and move on to check my other indicators.
I see. Okay, now it makes sense. Yeah, good. Thank you.
No problem. Good questions. All right, let's keep it moving. All right. Let me hide some of this stuff. All righty. I just want to make a quick comment about my candles. I know they may look different on your chart if you haven't changed your candles over, but these candles are Heikin-Ashi candles, which means that they take averages versus your normal standard candles, which there's nothing wrong with these candles. But if we are just going off of an eye test, look at how many gaps we have versus how clean that looks. All right. You got that, and then you got this. This is way easier to look at. There's no gaps. And the way that these candles work pretty much as trend indicators. So if you have this green with wicks to the upside, and the wicks are the tops of the candles. You can see if we look at this cluster of candles in this area, they don't have any wicks on the bottom. If you have long wicks above these green candles, that means that the momentum is strengthening to the upside. And if you have these long wicks at the bottom of red candles, that means that the momentum of the price is going to the downside. So momentum to the upside, wicks on top of the candles and they're green. Momentum to the downside, the wicks are to the bottom of the candles and they're red. So that's the only difference that I've noticed so far with these Heikin-Ashis. And again, if you like the normal candles, nothing wrong here, but there's a lot of gaps. It's kind of hard to track which way it's going without looking at it backwards, especially if you're looking at trend movements going forward. Does anybody have any questions about these candle choices? Cool. And if you need to change the candles, the only thing you have to do is click here on Trading View, and then you can, well, it's already set on candles, but you can go all the way down here to Heikin-Ashi. You can see I have it started already, and click on it, and then it'll give you these candles, which I think are better in my opinion. But yeah, I just wanted to touch on those real quick. So if you're looking at my chart, like what's going on, these are slightly different candles. All right, let's talk about support and resistance. This is really easy to spot. Support and resistance is just going to identify the trade range for you so you can know what's realistic for the stock. So we're looking at the S&P 500, and let's say we were looking at it at 563 right here on this blue line. That's 563. We wanted to know, where is it going to go before it stops or it starts to consolidate, right? So we placed this line already at 563. This line is at 563 because we have a few touches along that line. And when you have a few touches along that same price, that means that you can place your line. That line is going to be either support or resistance. Support is just simply placing a line below your stock price. So right now the stock price is 598. All right. And if I place any of these blue lines, that means that they're going to be support lines. And support lines are pretty much when the stock rolls back or it cools down and it goes down in price. These are the levels that you need to watch it at. So the stock is at 598 and currently 584. This top blue line would be the line to watch. After it breaks through 584, the next line to watch would be 573. And after that, we got this 563 line. And again, the way that I place these lines on the chart is because I was looking for 3 or more touches at this price point and a rejection. So if we look at this first blue line at 563, we can see starting on the left-hand side, the stock was climbing. Boom, it hit this blue line and then it started to sell off. So we got a few touches just right here on 563, and then we gave up. So we got a rejection there. And then the stock gained some momentum and some strength. It came back up, and guess what? Right at the same place that it rejected before, it started to reject again. So it had a hard time at 563. It's trying, and then the bulls gave up. It started to go down, and then the bears were winning. The bulls came back for one more try, came back up to that 563, 562 line, and finally broke through. And then they ran to the next resistance point. So support is going to be below the stock price. Resistance is going to be above the stock price, and you draw the lines the same. Again, 3 or more touches, place your line. So we got 1, 2, 3. We actually got a cluster, but we placed our line here. When you go up to this level at 572, we got quite a few touches, more than 3. We can place our line, and you can even see when we place this line right here at 572, the stock went all the way up to 583, and when it came crashing down, guess where it checked in at? Boom, it checked in right back at where we placed that line at 572. So being able to place these lines on your charts to identify the support or resistance can definitely help you out when you need to figure out where to get in the trade and where to get out of a trade. Same thing happened here. Do I have any questions about support and resistance? Again, pretty simple stuff. Find your 3 points and place your line. And the better you get at drawing your support and resistance, the more your trading will look realistic to you, because some people will get into a stock and say, it's going to go for 40%, but it's like, where is that? Where does the number stop, right? Where are the places to where it's going to have issues and it could reject? That's what we need to see. Any questions? Let me check the chat here. Perfect. No questions. All righty. All right, so let's talk about moving averages. All right, so we have some moving averages here. We have 4. Again, I always tell people you don't need 4. I'm a little OCD when it comes to my moving averages. You really can start with 2. Also, let me remove these lines for a second. I'll put them back up later just to have a cleaner chart. All right, so you have these 2 lines. These are going to be your moving averages, and the moving average is just basically the average stock price over any given period of time. So the moving averages that I have set right now is a 20 and a 50. So I have a 20-day moving average set is going to be my yellow line, and I have a 50-day moving average set is going to be my orange line. So when I look at these 2 lines, I know that this yellow line is tracking the average stock price over the last 20 days at any point in time. So if I look at, if I want to say, okay, where's the 20-day moving average on September 30th, I can put my mouse right here and see, okay, cool, it was at 560. If I want to know what's the 50-day moving average, again, that's going to be my orange line. I can just track it, hover my mouse over and say, okay, on October 16th, it was at 560 as well. All right, so again, these moving averages are just pretty much telling you the average stock price over whatever time period you set. I had the 20 and the 50. I think they work the best for beginners, in my opinion. Also, when these moving averages cross, that's what you really want to pay attention to. When you have the 20 on top of your 50, that means that the candles are going to run up against that 20 and bounce off. Now, once you have them change places, once the 20 goes underneath the 50, then that's called a death cross. A death cross means that the stock could be going down before it moves back up later on, right? So you want to watch the crossovers between these two. For my newer people, it may take a second for you to get an idea of what's going on, but I think when you're starting out, just lock in on, is my 20 above my 50, right? Is my 20-day moving average above my 50? And if my 20-day moving average is above my 50, the only thing I'm waiting for is a touch back at the 20 or the 50. So you can see in this area where the stock was at, what, 504, it was at $504. It was climbing up. Boom, it hit 529 and started to have some issues. It pulled back, and guess what came to save the day? The 20-day moving average. So this would have been a good place to buy some shares of the stock. You could have bought shares of the stock right here at 523, and then it took off and bounced off that 20 MA, that 20-day moving average, and it kept running all the way up to about 550 before it traded sideways, and then it kept running again. So every time you see it got close to that 20, it would consolidate, get close, and then bounce off. And then this time where it broke and it went low down to the 50, you can see that 20 started to curve and it went under that 50. So that's anytime you have your 20 under your 50, that's a sign that it could be going to the downside. So you want to be careful. Again, these moving averages are great, but I would not use them standalone. I would still check my RSIs. My RSI between 45 and 55 pointing up. And once my RSI hits 70, I need to go ahead and take profit on my trade. So again, you're using these things in conjunction. And in my opinion, for right now, none of these are stronger than the other. You all need these to help you make that decision. Any questions about the moving averages? Let me check the chat. Since there's no prior resistance on the SPY, what can we use to determine the turnaround spot? That's a great question, Ross. So basically what Ross is saying is that, okay, we don't have any 3 points to set our support or resistance because the stock is all the way up here. There's no 3 points because the stock has never been this high before. The SPY is at all-time highs. So anytime you have a stock that's at all-time highs, you want to use psychological levels. Psychological levels are pretty much 5, 10, 15, 20, even numbers, right? So the next psychological level for the SPY is going to be 600. After 600, the next psychological level is going to be 605, 610, 615, so on and so forth. That's how I like to use my, that's how I like to set support and resistance when I don't have any 3 points. And a lot of stocks this year are trading at all-time highs. The market has been doing really good. And I think this is on track to be one of the best years that we've had in the market. I want to say in like the last 20 years, I think they said. But yeah, psychological levels is how I would answer that, Ross. Does that help you, Ross? All right, I'll see what he writes in the chat. All right. Okay, cool. So Ross, you're good on that. All right. Ian, what platform are you using to evaluate this information? So I am using TradingView. This is tradingview.com. I used to use stockcharts.com. It was free. It still is free, but I think TradingView is a bit better. I know for newer people, if you're looking at this, it could look like a lot, but once you know what everything is doing for you, it makes trading really easy. Again, RSI is telling you a certain thing, MAs are telling you another piece, and so on and so forth. You only have to check about 3 or 4 of these before you can go ahead and hop in a trade. So Ian, TradingView is the platform that I'm using, but another platform that you could check out is stockcharts.com if you don't like TradingView. I always try to offer that up as an alternative to TradingView. All right, cool. Let's see, Ross. Oh, okay, he's just putting more stocks for us to chart in the chat. Cool. Again, if you all have any stocks that you want us to look at, in a few minutes, we'll go ahead and break those down, take a look at them, and see where the stocks are going. All right, so we just talked about the MA ribbon. Let's move on to the MACD. This is another indicator. So this indicator is called the MACD. It is short for moving average convergence divergence. The only thing, it sounds like a crazy name. The only thing this is really referring to is the relationship between these 2 lines. So we have a red line and we have a blue line. These lines represent different types of pressures being added to the stock. So the only thing you really need to know is what's happening here on the right-hand side. The rest of this is cool to just look at. This is pretty much history. But if you want to know how to make a determination off this indicator, you need to pay attention to this right-hand side. So this blue line, if it is on top, that means that the buying pressure is dominant and the buying pressure is being applied to the stock. Now, once buying pressure is being applied to the stock is going to go up. That is the pressure to buy, right? If the red line was on top of the blue line, simple enough, that means that the selling pressure is being applied to the stock and that the stock is going to want to sell off. So you can see once we have this red line on top for this period of time on the MACD, you can see that we have this red area, which means that the stock is selling off. It is pulling back. Once this blue line became dominant, it took over the red line. It's moving to the upside. You can see we have some green here, and that means that the buying pressure is being applied to the stock, and the stock is now moving up. Now, if you have a hard time looking at these red and blue lines and like, okay, I don't know which one's on top, fine. They made it easy for you by placing this histogram behind the lines because the histogram is giving you the same information. The histogram is saying if it is green, the buying pressure is being applied. So if you don't want to look at the lines and see, okay, which one is on top, literally look at this chart, and this is telling you. If it's green, that means that the blue line is on top of the red line. If it is red, that means that the red line is dominant. And again, when you have that blue line on top, that means that the pressure to buy the stock is being applied. When you have the red line on top, that means the pressure to sell the stock is being applied. And again, you're determining that by looking at it right here on the right-hand side. Do I have any questions so far about the MACD? All righty, I take silence as a thumbs up. All right. Another special thing about the MACD is that this is going to tell you the trend. So again, if the blue line is on top, we are in a buying trend. So that means that if you're looking at your stock and you want to know, is it time to buy? One thing you can check is look at that MACD. Is the MACD in a buy trend or is it in a sell trend? The worst thing you can do is hop in a trade and then start losing money immediately. I think not trading is better than losing money in a trade, if you ask me. So checking that MACD could help you determine which way the trade is going and what you need to do. Sometimes you may need to wait according to the MACD, and sometimes you may need to hop in again according to the MACD. So when these two lines switch places, this is called a MACD crossover. So if you're in the Discord, you already know that this is how I call a lot of my plays, is by saying, you know, all the other indicators are great. The only thing we're waiting on is the MACD to cross over. And what I mean by we're waiting on the MACD to cross over is that I'm waiting for the trend to change from selling to buying. So if the red is on top, I'm letting the group know, hey, we're waiting for blue to be on top. And as soon as blue crosses over red, you should get a nice size candle to the opposite side. So the stock is going down and we get this trend change that confirms that we're in a buy trend now. That means that we should get a nice green candle to start us in an upwards direction. And so a lot of people who trade options or day trade or scalp or whatever, however you want to do it, they wait for these MACD crossovers. That's kind of the crux of their trading style is, okay, I need a MACD crossover on a lower level, because once you get the trend change and the MACD crossover, that's when you get a punch to the stock price. So you may see the stock go from, you know, this stock is at 598. Depending on what time you're looking at it, it can go from 598 to 610 to 615. And that can be enough for scalpers or day traders to go ahead and make their profits for the day and get out. So the MACD is an incredibly helpful tool, regardless of what time frame you use it on. You just need to pay attention to what's up and what's down. Again, blue line on top, stock is moving up. Red line on top, stock is moving down. And again, if you can't, sometimes it's not going to be this clean, but you can always look at this histogram. If it's green in this area, we're up. If it's red in this, you know, on the right hand side, we're going down. Any questions? Really simple tool, but pretty much essential when it comes to
fast does it move? So we saw Coinbase, right? Like just
Yeah.
shoot. Is it moving quickly? Like along with, do you know what I mean? If it's a very volatile stock?
Yep. And it also, so that's a great question. Yep. It moves fast, and it also depends on what time frame you're looking at it. So if we're looking at a chart on the daily time frame, each candle represents 1 day, right? Which means that MACD is going to move at the pace of the candles that are being printed. If we're looking at a 1 minute chart, meaning each candle was printed every 1 minute, that MACD is going to be going crazy, right? It's going to be moving at the same pace of the charts that, I'm sorry, at the same pace of the time frame that we're looking at. So if you're looking at it on the 1 minute, it's going to move that fast. If you're looking at it on a 1 day or 1 week or 1 month, it's going to move a bit slower. And the volatility of the stock plays a part in that as well. So if the stock is extremely volatile, if you're trading Tesla, if you're trading PLTR, if you're trading NVIDIA, then yeah, you could get a lot of fluctuations in the MACD. But I think that's when you move to another time frame to get a better perspective. If it's moving too fast for you, move up a time frame. Like if you're looking at it on the day and you're like, okay, this MACD is moving too fast, move over to the week to slow things down for you. And if you're looking at the week and it's moving too fast, move over to the month, so on and so forth. Does that help you, Ty?
Yes, but I feel like, so what happened after the election? That almost feels like an anomaly, right? Like I'm still trying to understand, like you take Coinbase, a quarter of that company's value goes up in 1 day. It just feels kind of unreasonable. So how is it that a week can tell you that that's sort of in line? Do you know what I mean?
Yeah, so I think the move from Coinbase was more news driven, and there was pent up demand for Coinbase. Like people were waiting on the sidelines for Coinbase, in my opinion. And I think that once it popped because you had a candidate that championed crypto, and Coinbase is crypto related, right? So you have a candidate that won the election. You have one that's not really saying anything about crypto. You have one that's saying that, the US is going to become the face of crypto. And then you have Bitcoin reaching all-time highs. So it's just a perfect storm for the stock to go up, regardless of the MACD. Again, news can sometimes affect the stock regardless of the indicators. That's why you have to be careful. That's why you also need to play with stop losses, especially on risky trades, because the news there, it could have went either way, Ty. If we had a different outcome for the election, Coinbase could be at $100 now instead of knocking on the door of 300. So I think that the news drove that one. And then what happens after the news is when you check your MACD, it's when you check your RSI to figure out, okay, how do I navigate moving forward? Does it still have room to go? Where is it going next? Et cetera, et cetera. You got that, Ty?
Thanks.
No problem. Great questions. Great questions. Any other questions on the MACD? Again, extremely helpful tool and is extremely simple to read. Cool. Last one, stock RSI. So the stock RSI is just your momentum indicator. If you're wondering like how much momentum I'm going to have with this next trade, you need to check your stock RSI. So the stock RSI, the way that it works is that it works a little similar to the normal RSI, but it has a range from 20 to 80, and it loves to go all the way down to 0 and all the way back up to 100. So the way to play this one is that if we have, for instance, this stochastics is at 94, so that means it's only about 6 points away from 100. Once it hits 100 at this top, it is going to come back down and cool off, right? If I scrunch this chart up, you can see how many times it hit 100 and then came all the way back down and hit 0. It frequents 100 and 0, and the stops in between is going to be along this blue area. So the stops in between are going to be 20, 50, and 80. But the only thing you need to pay attention to is this number right here, this blue number, and where is it? So if this blue number is the way that I like it, if I'm trading the stock to the upside, I need this blue number to be between 20 and 50 moving to the upside. If this blue number is between 20 and 50, which this is the bottom half of this blue area, and it is pointing up, that means I have momentum enough to take it up from 50 to 80 and then to 100. So if it's all the way down here at 0, in my opinion, I won't touch it, because sometimes when you have something at 0, it will stay down there for a second. As you can see, this one, you would have bought it at 0, kind of just hung around down here before finally shooting up after it passed 20. So what I like to do for my trades is to check this one. And this is a secondary indicator. You may not need this one. Some of the biggest trades that I've made to date, I did not have this indicator, but this indicator has definitely helped me on entries and exits when I'm looking at lower time frames. So for my people that are going to day trade or intraday trade or scalp, I think that the stochastics RSI can be extremely helpful to you, just like it will be for a swing trader or a person that's going to stay in a trade for months or weeks. So pretty good indicator. Again, this is your momentum indicator. If it is all the way at the top at 100, that means that this is the max momentum, and it's going to start to slow down. If it is down here from 0 to 20, that means it's building up momentum. And once it breaks 20 and it's in between 20 and 50, it is building that nice momentum that you need to the upside. And then you can take it from 50 to 80, or if you got in at 20, you can take it from 20 to 80. But also, again, add this in with your other indicators. So wrapping it all back up, again, you have an indicator with the RSI that's going to tell you if the stock is overbought or underbought. The reason why I have this at the top of my chart is because if I'm looking to trade a stock, and the first thing I check is the RSI, and the RSI is at 72, I am not trading. If I'm swing trading, again, if I'm day trading or doing something else or trading down, like playing puts, different conversation. But we're just talking about trading, swing trading to the upside. If I check the RSI and it is at 72, honestly, I may not even check the other indicators because the RSI is too high and I may not need to touch or deal with it at all. right? So that's why I have it at the top. And then again, when you're looking at the candles, pick your candles. If you're cool with the normal candles, that's fine. If you want a cleaner look, you can switch over to the Heikin candles. But again, just pay attention to your 20 and 50 to see where they are in relation to the candles before you make your decision. And then with the MACD again is going to tell you what type of pressure is being applied to the stock. So if someone comes to you and say, hey, I'm looking at the SPY, is it trending up or is it trending down? Is it in a buy trend? Is it in a sell trend? When you look at the MACD, only thing you have to check is either the histogram, which the histogram, if it's green, is buy, if it's red, is sell, or you can look at the lines. If blue is on top, that means that buying pressure is applied. If red's on top, that means selling pressure is being applied. Any questions about any of this? And let me check the chat here. Yvonne's talking about Coinbase. And yeah, Bitcoin to 100K. Yeah, I just had a conversation about Bitcoin over the weekend, and we were talking about it going between 100 to 150K is what I was seeing. And that was the conversation. I'm going to keep monitoring Bitcoin, but I do think that 100K is reasonable. But once it hits 100K the first time, I think we may get a pullback, and then we can start our ascension above 100K. And I think again, we could see Bitcoin at about 150 in the long run. Cool. Any other questions before I pass it over to Mark? And again, Mark is going to cover the stocks that you all have posted in the chat. Cool. No questions. All right, cool. Somebody said, why is Bitcoin running? Why is Bitcoin running? It needs to run. I think since everyone has been paying attention to this inflation battle that we've been having since COVID, and the Feds have been printing trillions of dollars, I think that more people are thinking that Bitcoin is more secure than the US dollar. So a lot of institutions are also selling Bitcoin. A lot of just retail traders are switching over to Bitcoin because people are becoming fearful of the dollar. So people are moving over to a better store of value in their opinion, and they think that Bitcoin is going to be that. So I think that's why Bitcoin is running, because more and more people see what's going on. You also have Trump saying that again, the U.S. should be the face of crypto. What does that mean as far as laws and policies? I don't know yet. But with that being said, that's going to boost crypto as well. More people, if the president of a country, one of the biggest countries or strongest countries in the world, says that we're going to be, moving towards crypto, a lot of the citizens in that country are going to buy crypto. This is, just how it works. So I think that that's what's going on with the run on Bitcoin, in my opinion. But yeah, if we don't have any other questions, I'll go ahead and pass it over to Mark. Let me check the chat one more time. But at the same time, the dollar's also going up. Yep, it is. But it could be a pump and dump. That's what a lot of people are moving over to crypto. So a lot of theories about what's going on. But again, I really think the election is what was pushing Bitcoin for right now. And once that phase dies out, then we'll get to see what else is pushing Bitcoin to the next level highs. But right now, Trump is the reason that it is running. And we just have to see what happens next. All right, Mark, I'm going to go ahead and pass it over to you. Mark, I see you took your mic. Mark, if you're saying something, we can't hear you. Mic is not working. You want to try to leave and come back? Oh, he's closing the app. Okay, cool. So what I'll do while Mark is doing that, I can cover a few of the picks, and then when he comes back, I'll just switch it back over to him. All right, cool. So let me share my screen again. We got a couple of stocks to look at, and I think you all have some good picks for us to watch. Go back to my screen. We can look at normal candles for a second.
All right.
Oh, you're back. Okay, cool. Let me stop sharing my screen. I didn't think it was gonna come back that quick, but Let me stop sharing my screen and take it away, Mark.
I appreciate it. 1 second to share the screen now. Oops. There we go. All right. Let's see here. Find the first one. Okay. Oh, so Holidays, could you send a message of the stocks? Because when I left, I lost my comment section.
Oh yeah, when you left.
Yeah. I think I saw Ross, he had posted, so I'm not sure if anyone else posted any.
Yeah, I got you. So this is Ty. I'm gonna just put the name by the. I forgot you can't see the chat once you leave and come back. There you go. That's Ty, and I'll just update the rest of them.
All right, so MU. We'll start with MU since it's already up here. All right. So we talked about MU a while ago. It looks like it was making a bullish flag. Right now, we see that it's testing, and on the weekly chart, it's testing. It just broke above its moving averages last week. So it broke above all the moving averages. Can it stay above here? If it stays above this level of this moving average, which is sitting at about 106.45, and we can draw support here, first support at 106.45. If it can stay above this level, we could be seeing this start to try to continue to trend upwards and try to get back to this 133 range, which we talked about earlier or previously. Now, looking at where the stochastic is at, it is sitting pretty high. It's at 81, so it has a little bit more room to get to 100. Will that be enough to hold it up there? Potentially, yes, because we have a MACD crossover to the upside as well. And with that crossover to the upside, we know that's a bullish indicator. And the regular RSI level is sitting at about 53. I would just be a little bit careful with it. So if you're looking to get into a trade, I would probably just wait and see what happens. What I'll be waiting for is if it pulls back, can it test this 105, 106 range and stay above that? If it can, then that gives us a little bit more room to say, okay, this is our floor, and we should be seeing it try to get back to our ceiling. Just looking at it on the weekly. Now, again, overall, we should be seeing to get back to 130, but with some type of cool down, that's probably going to happen. But we should be seeing this get back to 130. So let's check the daily and see what's happening for this week. All right, so looking at the daily, see we've been testing resistance. So we can draw a nice little resistance here at about 113 will be our resistance area. And we can see from previous, tested this area, rejected it, pulled back. Tested it here, rejected this area, pulled back. Even back here, when it was coming down, it came and tested this area before it broke beneath it, and it was trying to get back to it as well. So this is a nice area for us to say that this is our resistance or ceiling. So from here, what's happening? It looks like we're rejecting this area, and with this rejection, we could be seeing this pull back. Now, the first place is probably going to come and try to test this, the moving average, which is at about 108. And if it breaks beneath that, we're going to be seeing it come and try to test this 106 range that we talked about. Now, from there, if it breaks beneath 106, the next place we're probably going to see it come is wherever this 20 or this 50-day moving average is at. So right now, the 50-day moving average is at about $100.50. So we can say that that's where our moving average, that's where our support line is at. If it was to break our support at 106. Looking at the indicators, stochastic is also high on the daily as well. So we could be seeing that pullback that's about to happen. So I would just be waiting to see what happens. Like this looks like it's going to reject. It's rejecting this area. It looks like it's going to continue to pull back just from where that stochastic RSI level is at. It's almost in that overbought region. It's at 91. So it's like 8 more points before it hits 100. And then our RSI level is pointing downwards. So this, and it's showing us that this is for the most part, currently, this is like the high, the highest the RSI has gotten the past few days, the past few weeks, about a month really, that this is the highest it's been getting. So this could be the ceiling for the RSI level. So we could be seeing this come down and cool down. And with that cool down again, I'm thinking it's going to come and test about 106 and try to reject from that area. And if it breaks beneath that 106, then we could be seeing 100. But this week, I'm thinking we'll probably see Micron get to about 106. And then from there, I'm looking to see, can it reject this area? If it can reject that area, then we should start to see it also continue to increase in value. Any questions on MU? Okay, perfect. Let's check out NVIDIA. Starting weekly. All right, so NVIDIA hitting all-time highs, continuing to make all-time highs. Anything from this point, again, treated $5 increments. So the next place that we can see NVIDIA hit is 150, and then after that, potentially 155. It's testing all-time high levels. So just be a little bit careful. I can't tell you that this is going to continue to go up and it's going to get to $200 or $180. I can't tell you that, but just looking at, just treat it as $5 increments and just pay attention to each time it's hitting a new $5 increment, just reevaluate the stock. Just looking on the weekly chart, it's looking like we're getting close to having some type of cool down that's going to happen. Just looking at where the RSI level is at, it's almost in that overbought region of 70. It's sitting at about 65. It has a little bit more room, and it can get above that 70 range, but I would just be a little bit careful looking to get into a trade at this point and trying to ride it out for a while, because we should be seeing some type of pullback happen. Looking at also the stochastic RSI, it's in that oversold region, overbought region as well, excuse me. It's almost at 100. And we know anytime it hits that 100 range, it's going to try to come down and get back to the 0 range. So just be on the lookout for that. If you're in here, I'll be telling you to try to shave profits on those $5 increments. So when it hits like 150, look at the chart, see if it can break above it. If it can, you can stay in. If not, if it's looking like it's going to start rejecting, you can start to shave some profits. You don't got to shave all of your profits, but you can take a little profit for yourself, just so that once it does pull back, you can reinvest it back into NVIDIA, or you can reinvest it into another company. This is the weekly, so let's check the daily. So same thing with daily. Our stochastic RSI level is getting pretty high. It's almost in that overbought region. RSI level is sitting at about 63, pointing downwards. Again, we can treat this area that is currently at as the first support or first resistance level, but we know ultimately it's going to, if it continues to trend up, 150 is going to be where it's at. If it rejects this area, then we could be seeing NVIDIA try to get back to this 140 range that we have here, this support line we have drawn here, because that's the next level of support. And then that's also going to be where this 20-day moving average is at. So anytime it's testing those 20-day moving averages, it's always good to, or anytime it's testing a moving average, it's always good to treat it as support or resistance. And we can see from this chart, last time it tested this 20-day moving average, it went below it, but then it rejected it and then continued to go up. Even back here, it tested those moving averages and it started to trend upwards. And these moving averages are in chronological order. So the 20-day is up on top, then you have the 50-day, the 100-day, and the 200-day, and they're all pointing upwards. So anytime you see this pattern happening with the moving averages, that gives you a strong signal that when the stock price comes and tests the 20-day, we could continue to see the stock price increase. So we could be seeing a pullback happen, and then once it tests that 20-day moving average, we could see a rejection that continues that upwards momentum. But this week, what I'm looking for is if it rejects 150, we'll probably be pulling back to 140, and then that's where I'll be waiting to see what happens. So I'll be waiting to see what happens once it gets to this 140 range. If it gets to 140 and it starts to point back upwards, that's a good place where you can, maybe if you wanted to try to get into a quick trade, you can get into a trade and have your target price at like 150, because that's basically the next place it's going to go if it rejects this this support line, excuse me. If it rejects this 140 support, we're going to be seeing it get back to 150. And if it breaks beneath this 140 support, then we're going to be seeing it get to about 130. Any questions on NVIDIA? Perfect, perfect. Next one. Constellation Energy. Let's start with the weekly. Let's see what's happening. All right. So on the weekly, looking at this, we have support at this 20-week moving average, which is at about 218, 219. It's going to be first level of support we have, or the next level of support. After that, if it was to break beneath this support, I can see it coming and trying to test where this 50-week moving average is currently at. It'll probably be up a little bit higher. So it'll probably be somewhere at about 195, 196. It's going to be where that next level of support, if it was to break this 218 and trend downwards. Looking at these indicators, again, where the RSI is pointing downwards, and then that stochastic is also pointing downwards, and this is at the neutral zone. We could be seeing this continue to pull back. I would just be a little bit careful if you're looking to get into a trade. This may not be the best place to get in. You can probably find this stock price for a cheaper value. And that's just from the indicators. Again, stochastics pointing downwards, RSI is pointing downwards. And then we're really close to a MACD crossover to the downside, which anytime the blue line crosses underneath the red or orange line we have here, we know that that's going to cause the stock price to decrease. So we could get this for a fairer value than what it currently is at. And from there, what I'm thinking is if it continues to go down, the next place I'll be looking to see what's happening is at this 195 range. Because if this goes down, it's going to break beneath this 218, 219 range that we have here, this 20-week moving average. It's going to break beneath that. And then the next place is going to be coming to test is this 195 range. So this is where I'll be looking to try to get into a play. Once it hits 195, I would be re-evaluating the stock to see, okay, are my indicators showing me that we are potentially at the bottom? And if so, you can feel more comfortable getting into a trade with it. And then that's on the weekly. Let's check out the daily. So the daily chart is showing us this week we could potentially see it get to about 254. And then from there, we may start to see it reject. Again, it's going to have to break above this 50-day moving average, which is rejecting it right now. So if it can break above this 50-day moving average, we're going to be seeing this get to about 253. And then from there, we may see a rejection from it. If it was to continue to trend downwards, again, it's going to come and test. It's been testing this 232 range. So my next place that I'm thinking is going to go and try to test is going to be, you can just clear this one out. The next place is going to go and try to test is going to be about 220, which is going to be the 100-day moving average. So this is pulling down. 100-day moving average could be an indication. Okay, if we can reject this area, we may be able to get into a play that can ride us back up to this 50-day moving average. But I would just be a little bit careful, especially if you're trying to hold it for a few months, just because of where that weekly is at. It's looking like it needs to cool down a little bit more before it turns around. Any questions? Oh, I don't know, were you going over Microsoft today? I'm not sure what picture you're going over. I don't know if I want to.
No, I didn't have Microsoft. I can go over it though. That's cool. I'll add it to my list.
Okay.
Yeah, I can do it.
Okay.
Cool.
All right. SMR. All right. SMR, again, looks like this is all-time highs. So $5 increments. The next place this is probably going to go and test is going to be $25, which it's currently doing. And then after that, $30 would be the next place it could potentially test. Looking at the indicators, it's showing me that this is getting to the top, or is becoming overbought RSI levels in the overbought range at 76. My stochastic RSI level is at 100. So I know eventually this needs to start to cool down. So we can draw support at about 25. It's going to be our first support level, or excuse me, resistance. Go ahead, Ty. You raise your hand.
Quick question. So the earnings shows that it's missed its earnings, like back since 2023. What's causing the inflation in the price?
Let's check the news, see what's happening.
Like that's a long lineup of missed earnings.
Yeah, it is. Revenue declines. So this could just be, it could just be like a short squeeze potentially that's causing it to go up. That could be the reason why it's increasing, because there's no news really that I'm seeing in here. Tumbles after big earnings miss. Yeah. Let's see. Yeah, so this could just be a short squeeze that's happening. Again, I this is my first time hearing about this company, so I haven't done any. I haven't traded this company, or I haven't looked at the company financials outside of this. So with penny stocks, a lot of times short squeezes happen, but that could be the reason why these increases are happening right now. It's just short squeezes. But so looking at this one, RSI level is really high, sitting at about 76. Stochastic is also high. We know it's testing all-time high levels at this point, and it's hitting this resistance. If this was to come back and start to pull down, first place is going to come and test is this 20 range, which is the next level. It's not going to be the strongest support line to have, just because this is also all-time highs for it, but this is going to be potentially the next place. It's about $20. And then if it was to break beneath that, the next place after that is going to be about 16, because we see that this is the last place that we had activity at. So I would just be, again, a little bit careful. If you've been trading this stock and you know about it, I'm pretty sure you did your due diligence with it. You looked at the investor relations. You've checked out the CEO. You know exactly what they have what they have in store for the future. But just looking at it, I would be a little bit careful trading this right now, just because of where those indicators are at. The RSI level and the stochastic. This is getting a little bit high, so I would be careful trying to get into a trade. If you made profit off of this, I would definitely say, go ahead and take profits off of it and wait for a pullback and find a better position at it at this point. Again, missing all those earnings is a little bit alarming as well, as far as the company financial growth. And then looking at the daily is saying that they have a little bit more room that they could potentially go up, but again, I don't expect them to go up too much higher than what they're already currently are at. This may get us back to $25 and then start to pull back from there.
Thanks.
All right. Planetary beat on their earnings, causing them to spike up. All-time high levels. Let's go ahead and draw that support resistance right up there. If it was to start to pull back, we could potentially see it get back to 440 That's the next place we can draw support. It may still bring it down in $5 increments. So this may, from where it's currently at about $60, we could potentially see this get back to like 55 and then 50 before it gets. Excuse me. Before it starts to come back down to this $40 range. Looking at the indicators. Would I get into this trade right now? Would I open up a position? No, I wouldn't, just because of where the RSI level is at and the stochastic is pretty high. I know this needs to pull back and come down a little bit. Now, if I'm looking to shave profits after this earnings beat, yeah, I would definitely take profits off of what I have if you're already in the trade. But looking to get into a trade, I would be just a little bit careful, because I know that this spike was because of their good earnings, and I would just be a little bit careful. Maybe wait until it pulls back and find a better entry point, because just looking at the weekly, the indicators are running hot, right? The stochastic is high, RSI level is high. We do have separation on that MACD to the upside, but I don't see it going too much higher than what it currently is at right now. Let's look at the daily. I'm pretty sure the daily is going to be showing us some high values as well. Yeah. So looking at that RSI level again, it's pretty high. That's at 80, overbought. Overbought. Stochastic RSI is at 100. We should start to see this start to pull back down as well. And with that pullback, we could be seeing this try to get back to the 20-day. Wherever that 20-day moving average is going to be, that's where I'm going to say, okay, that's where my next support can be at. So throughout the next few days, this 20-day moving average may move from 45.40 to somewhere at about 50 is where probably the 20-day moving averages would be at. And then that's where the place is going to be where I'm looking to see what happens from that point. Can it reject and go underneath the 20-day moving average? If it does, then we're going to be seeing it continue to go down. If it's rejecting it, and we could potentially see it get back to this 57 range and just consolidate in between those two ranges of 50 and then 60 that we have drawn. But just looking right now, I wouldn't get into a trade just because of where my indicators are showing me it's overbought on the RSI and the stochastic. So I would just be a little bit careful of getting into a trade and trying to play to the upside because it has to cool down eventually. Any questions on Planet T?
Yep. Thank you.
Mm-hmm. All right, so they have earnings coming up this week. It looks like on Thursday. So because they have earnings again, on Wednesday before the market closed, I would potentially be out of my trade. Or if you wanted to be, if you wanted to be risky, you can stay in and play earnings. But me personally, I don't play earnings because of it's not guaranteed that it's going to go the way that you want it to go. It's like a 50-50 chance. And a lot of times for me with earnings, I don't win on earnings, so I don't even play them. But looking at it, we can see current resistance is basically hitting all-time highs. All-time highs is at about $27. $28 is almost all-time highs. We can say resistance is going to be at this current value is at where it closed at. If it was to break above that, we will be seeing this probably get back to about $28. So that's the next place we can have resistance. Now, if it was to reject our current price at 24 and pull backwards, I'll say it's going to try to come to about $20 in the price. And then from there, if it breaks beneath that, we'll probably be coming back down to about 16. Looking at the indicators, RSI level is high, stochastic RSI is high. It's just looking like it's not a good time to get into this trade, especially paired with earnings. I would only potentially be able to be in this trade for like 3 days. So for me personally, I wouldn't be looking to get in just right now. And if I was in the trade, I'd probably be shaving off profits just because of how high those indicators are, the RSI and the stochastic. We do have that separation on the MACD, but again, because this RSI and stochastic RSI is so high, I wouldn't be necessarily looking to get into a trade right now for this stock. Let's check out the daily. On the daily, okay, so daily we have stochastic. The regular RSI is pretty high, but my stochastic is low. And we just had a crossover on the downside on the MACD. So I still would just be, while that stochastic is low and we could see it continue to go up, I would just be a little bit careful trading this just because I know that this could potentially, it looks like it's making a rising wedge. But I can draw it out. So currently, it looks like the stock price is making it's not the cleanest rising wedge, but it's making a rising wedge where the stock price is going up. It went up, tested this area, pulled back down, tested my support. And then when it went up and tested my resistance, it made a higher high on the second one. So this is the second test on resistance, and this test is higher than my last test on resistance. And the same thing for my support. It tested support this second time, and my test on this support level is higher than my previous support level. So I would just be a little bit careful because rising wedges are actually bearish. So once this breaks out this pattern, we could be seeing this on the downfall. So I would just be a little bit careful. And then when it breaks out of this pattern, it normally goes back to the beginning of where the support line is drawn. So we have support at about $13. So we can say when it breaks beneath our support, we could be seeing this get back to $13 eventually. So I'll just be a little bit careful trading this, especially with the earnings that's coming up on Thursday. Again, if it was to break above resistance, we'll probably be seeing it get to like $28.50 if it was to break above resistance.
Okay.
But if it's going down, it could be going down.
Thank you.
All right. Then we have and is that your last ticker, David? Is that MF? No. Euro. And is this the right company, David, that I'm looking at right now? Wendell, for your last ticker, MF?
Oh, yeah, that's it.
Okay, all right. I just wanted to make sure. All right, so looking at the weekly, let's draw some support and resistance. Resistance, first place is going to be this 200-week moving average. Again, we treat our moving averages as either support or resistance. So because the stock price is beneath it, this is going to be our first level of resistance. And we can see here previously when it tested this moving average, it's been rejecting it. So that's a strong line for it to break above. Now, if it breaks above this level, which is sitting at about $94.50, the next place we could be seeing this get to, it's going to be right here at about $99.50, $99.40. That's the next place that we could be seeing this get to if it was to break above our current resistance at 92.50. We could be seeing this get to 99.50. Now, if it was because it's trading in between these, because it's trading in between those moving averages, and this is a cluster of moving averages below it, all these moving averages are going to be strong. When it comes down, it's going to test these moving averages and try to reject it. Now, if it breaks beneath those moving averages, in the next place, we're going to see it get to right here. Is that about it's going to be at about $85.50. It's the next place. So if it was to break beneath this $89.30 range, these moving averages, the next place we'll be seeing this try to get to is about $85.50. Looking on the weekly chart, it looks like it's trying to cool down more on that stochastic RSI. So we could be seeing that pullback again. I don't think it's going to break beneath the $85.50 range. We could see it just try to keep rejecting these moving averages, and we'll probably be seeing it just bouncing in between these zones for a little bit until that stochastic RSI gets back down and it's ready to make a run. Let's look at the daily. Let's see what's happening. All right, so on the daily, we see it's testing our 20-day moving average, trying to break above it. It's broken above it just a little bit. So if we can see this and on Monday stay above $92.50, we'll be seeing this get back to $94.34 this week. Looking at how it's setting up on the daily, that should happen. Just where the stochastic RSI is low, my RSI level is pointing upwards, it's inside that sweet spot, and then we're really close to a MACD crossover to the upside. So with that MACD crossover to the upside, that could cause us to get back to $94.50 and then even potentially break above this level and continue to go a little bit higher. If it was to break above $94.50 on the week, the next place it's going to probably come and try to test is going to be, we can say, right here at about $96.50 will be the next place it's going to try to come and break above. So what I'm looking for Monday is, all right, if we open up green, I'm looking to potentially get into a play where I can ride it up to 94. And from $94.50, that's where I'll be looking to see, okay, can they reject? Is it going to break above this level? If it breaks above this level, you can stay into that trade. And if it doesn't and it's trying to reject it, you can go ahead, get out the trade, and then just wait for it to break above this $94.50 range, and then you can play it up to $96.50. But looking on the daily chart, just looking at how it's setting up, this is setting up to start to be bullish on for this week. So we should be seeing this get to $94.50 for sure. Any
Thank you.
questions? Mhm. No problem. All right, so I see a few more. So for us, let's see. All right. So again, all-time highs for this stock price. Next place it could potentially get to is going to be $90 if it was to continue to go up. It's getting close to that overbought region. RSI level is sitting at about 71.22. So we could see it get above it. I would just be a little bit careful. This could be running out of steam. So just be a little bit careful with it. If it was to pull back and start to reject, you can start to say $5 increments, but ultimately it'll be trying to get back to about $70. So, but if it was to pull back, first place is going to come and try to test this probably 80, 75, 70, and then, well, 70 would be this last place that it'll test. So we can say next support is going to be about 80. And then we can say the next one after that is probably going to be about 75. Just treating it as $5 increments until it gets back to this support level that we have here at 70. Let's check out the weekly. Excuse me, the daily chart to see. Yeah, so daily chart, RSI level is high, stochastic is high. I'm thinking it needs to start to pull back and cool down. So if it starts to pull back and cool down, again, first place is going to come and test is about 80. And then from there, that's where I'm looking to see what happens. So once it hits 80, can it reject 80 and continue to go up? And remember, we created these last two just now, just off of because of the $5 increment. So 80, we can see it tested 80 and tried to reject it. Even the 75, we see this last candlestick tested 75, was trying to reject it, broke above it, and continue that upwards pressure. So if it was to pull back, next place is going to come and test is 80. And if it was to break beneath that, we're going to probably be seen to get to about 75. And just looking at the indicators, the RSI, the stochastic, I wouldn't be confident getting into a trade here. I would just be waiting for it to pull back. I would just count my losses, right? I would say I missed this boat. I just need to reevaluate some other stocks, maybe wait for this one to cool down and then get in and ride it to the upwards direction. But right now, I wouldn't be telling you to get into a trade right now with this stock just because of how high that RSI and stochastic RSI level is at. I know eventually these need to come down and cool down. So this might not be the best place to get in. All right. Cool. All right. So we see ANAT was testing all-time highs. It rejected all-time highs that we had drawn at 417. It came down to our next support level that we had, which was at about 400. So if it breaks beneath this 400, which it's really close to breaking beneath it. If it breaks beneath this 400, while it's going to go back to 375, 380, this 380 range, this next support line we have drawn, I'm thinking eventually it's going to try to come back to this 20-week moving average. Looking at how the stochastic is coming from the overbought region is pointing downwards. RSI level is pretty high, and we're really close to a MACD crossover to the downside. I would be a little bit careful getting into a trade with this one. I would definitely be waiting for it to test this 20-week moving average and see if it can reject that level before I even attempt to get into a trade here, just because of how high those indicators are and the fact that we're really close to a MACD crossover to the downside. That can cause us to have a breakout to the downside here. So I would just be a little bit careful trading this one. And if you're in a trade, maybe shave a few profits and just wait for a pullback to happen. Let's check out the daily. Yeah, looking at the daily, the RSI level is in the neutral zone, but it's pointing downwards. So this does have room to continue to go down. And the fact that the stochastic RSI level is so high and it's pointing downwards, I wouldn't get into a trade right now. I would really wait because we could be seeing this pullback. Pair that with this crossover on the MACD to the downside on the daily as well. This is looking like it's not looking like a good opportunity to get into a price. I will be waiting for these indicators to start to get to the bottom before I start to try to even think about getting into a trade. So I would definitely just have this one on the watch list with a trigger that, okay, what happens when the stock price gets to 380, trigger me so that I can reevaluate this stock to see what happens. Because this is going to be the next place it's going to be getting to. When it breaks beneath this support at 400, we're going to be seeing it get to about 380, which is at the 50-day moving average, excuse me, and also our area of support that we have drawn. Any questions? Let me check the chat. Okay, perfect. All right. TO. All right. Peloton currently sitting at about $8.90. It's been moving pretty slow, so the next place this could potentially get to, won't even say like 16, the way that it's been moving. Yeah, it's the next level of support. So we could be seeing it get to about $16 if it was to continue the trend upwards. It's currently testing a resistance area right now. So this $8 or $9 range is our resistance. So it's been a strong resistance in the past. We can see here it's been trading like this since July, June. Yeah, about July has been trading at this $8 range. Looking at the indicators, I wouldn't be confident saying it's about to get back to 15 anytime soon. Just looking at the indicators, RSI levels in that overbought region, stochastic RSI levels in that overbought region. While they did have good earnings, again, we could be seeing this start to pull back and cool down. So I would just be a little bit careful just looking at these indicators, trying to play it for the long haul. You could probably find Peloton for a cheaper price and then get in and hold it for the long haul if you're looking for the long-term aspect on Peloton. If we check out the daily, we can see on the daily, RSI level is high. We do have room on the stochastic RSI level to go up. Where that's going to get us maybe back to this support line of resistance we have drawn at about $9, $8. I can't even see the price that is drawing that right now. There we go. Yeah, so we have it at about $9.19. So about $9 is going to be where it's going to come and test. If it breaks above that level on the daily, I will keep drawing them really close, my support and resistance. So the next place, if it breaks above the $9 range, is going to be like the $10 range. It's going to be the next place that it could potentially get to if it was to break above my resistance. Now, if it was to reject resistance at $9, then we're going to be seeing this get to $8. It's going to be the next place that we can see it. If it rejects $9, we're going to be seeing this get to about $8. And I'm thinking the cool down needs to happen on Peloton, excuse me, just because of it's testing this resistance level. So I'm thinking that it needs to come down and at least try to test $8 before it starts to trend back upwards. I would like that RSI level to get a little bit lower before I get into a trade. Now you can potentially, if it's looking like it's about to break $9, you can potentially get into a trade this weekend. Try to ride it up to $10 just because of where the stochastic is at. It does have momentum to get to $10. But again, I would just be a little bit careful and I would pay close attention to it just because I know I don't have that much room before it starts to pull back and cool down. But ultimately, it'll probably pull back down to $8. Worst case scenario, wherever this 20-day moving average is at, that's where it'll ultimately get to before it starts to try to reject from there. So we probably can see it get somewhere to about $7 or $7.50 before it starts to reject, just like it's been doing previously, like we see here, because the moving averages are starting to get into chronological order where we're seeing they're crossing over each other, and we have 20, 50, 100, then 200 pointing upwards. So we could start to see this try to run up and start to increase, but we'll probably see it pull back before we see that happen. Any questions? All right, perfect. 1 minute. Now, where you going over Tesla? I know you chart Tesla out a lot, so I just want to make sure you wasn't going.
Yeah, I can go over Tesla.
Okay, yeah, I just didn't want to try it out if you were going to. All right, so it looks like all the ones. If y'all have any more, just feel free to post them inside the chat, and I'll be able to take a look at them. I'll pass it out to the deers.
All right, cool. I appreciate that, Mark. All righty. Let's take a look at a few. And what I can do is move a few things around. Give me 2 seconds. Excuse me, share my screen. Look at Tesla. All right, so we'll look at Boeing and Tesla next. And then we can look at the few picks that I have. I have about 4 right now that I'm looking at for this week. Probably add some more during the week once the actual market opens. Those will be posted in the Discord. All right, where are we at? Boeing. All right, let me share my screen. And let me switch it back to normal camera for a second. All right, Boeing. All right, very, very controversial stock. But it looks like they've been, let me turn off my VRVP for a second. Looks like they've been finding a bottom. It looks like they've been consolidating around about 150 right here. They've been consolidating. Let me add some more moving averages to my MA ribbon really quickly. All right, yeah. So they've been hanging around they haven't broke the 50-day moving average since back in August. So it looks like that could be the next goal for us. So the 50-day moving average right now is at about 155. They are at 151. I think after we break the 50-day moving average, we could be moving up to this level. Where is that? This level right here at about 170. But it first needs to break that 50-day moving average. The 50-day moving average is coming down in this orange. If we can't get a crossover, because it looks like with this level of consolidation, we could see the 20 back on top of the 50, which would be really good for the stock, which means that the downtrend could be over. But since Boeing is lawsuit prone, and I think they're also going through a strike right now. I don't know if they settled that strike just yet. But if they haven't settled that strike, then they're going to be running into some issues with that as well. So Boeing, I think going long on Boeing could work because we could see Boeing back at about $200. Right now, looking at the daily, let's see, we got 47 on the RSI. And again, the RSI is telling us if it's overbought or underbought. Right now, it's right in the middle, around that 50 line. It is at 47 pointing up. But it's just consolidated. So the RSI is fine on the daily. Now we look at the candles, it's consolidating on support on that floor. We need a pop to get it going back to the upside. They didn't do too bad on earnings. They missed the earnings by 0.83%, and they actually beat on revenue by 0.14%, which is pretty decent. Let me see. Ian is saying that the strike is settled. The stock was hesitant to start to increase at first, but now they've even picked up a few new contracts. Okay, cool. So the strike is over. That's good to hear. So now that they've settled the strike, I think that was a big part of holding back the recovery. And I think that they're also, I think I also saw them in business to sell one arm of their business. I think the space business, I want to say that they're having it for sale. So if they can get a nice sale on the space business, that could also provide good news for the stock for it to move back to the upside. I think the upside levels we need to pay attention to is going to be 170, and then 195, and then 200. I think the 195 to 200 zone is where we need to pay attention to the most once we are correct, because I think we got heavy activity in this range. So if you look at this 195 and 202 zone that I created with a support and resistance, you can see how many touches and how much activity, especially back here, that we have between that price point. So nice $50 pop that you can play. It may take some time for it to get back up there, but it just depends on if you're trading options or shares. If you're doing shares, accumulation at the bottom could be nice. If you're doing options, you may want to be a little careful because you do have time decay at play, and you may want to stretch it out a bit further if you're going to go for options. But again, since the stock is pretty volatile, in my opinion, I would be careful with call options in particular, because again, if you would have bought a call option here and the stock is just chopping and consolidating, is only moving about $1 or $2 a day, your contract is getting eaten up by time decay, which is making you lose money. But the MACD looks like it wants to cross back over to the upside, which it has been climbing for a while. So the buying pressure is there. The selling pressure took over momentarily, but I think that once we get this MACD crossover and we get back above this O line here, then Boeing should be back on the road to recovery. Stochastics is also sweet. You see it touched here right at 20, that's where I would like it to be. And right now it's at 26 and it's trying to recover. The next target that I would pay attention to on the stochastics, if you're watching it, would be that 50 range. After 50, I'm looking at 80, and then of course 100 to the top side. So that's what I would be watching on the daily. Let me check the 4-hour real quick. Alrighty, the 4-hour looks even better. If you look at that MACD, it looks like it's even closer to having the MACD cross over to the upside. We got a fake out right here to where it actually crossed over and then it came right back down. I think now, since with the news that the strike has been settled, Boeing is picking up additional contracts, and I'm hearing that they're planning to sell their aerospace arm, or the space program actually. If they can go ahead and do that as well, that could be a good catalyst to send it to the upside, and then we can get this MACD crossover sooner than later. Let's check the 1 week. And then we can see where I think this is going. Yep, pending MACD crossover on the week as well. So it looks like we could have a big change in sentiment as far as what people think about the stock. It's been getting beat up for months now. They've just had bad luck after bad luck. But it looks like, again, you want to buy good companies at a bad time, and this could be a good time to buy Boeing, as long as they can stay away from lawsuits and things like that. And again, I'm aiming for 170 to that 200, 195 range as being my price targets to the upside. The weekly stochastics is pretty low at 36, so be careful. Again, the way I look at Boeing right now is that a long hold would be nicer than trying to play something that doesn't have any momentum with options. So again, those are the price points. Do I have any questions on Boeing, Ian?
No, that's all it for me. Appreciate it, man.
All right, no problem. All righty, Tesla. Do I want Hakinashis for this one? Let me see. We can do Hakinashis. That's cool. All right, Tesla. Tesla has been killing it again with Trump. Take this VREP down for a second. With Trump becoming president. Excuse me. All right, so this trend line was the one to break to get us into the bullish, to put us in a bullish space. We broke above this trend line here. What was that? Friday the 8th. So we broke it, and then Tesla went on a crazy run at $24 pop to the upside. I think that Tesla could start to catch back up with the rest of the S&P, because for a while, as you can see, Tesla was not doing anything. Tesla was chopping up and down in between the same price point that I have been sitting at since the late 2020s. So this is what 2024 about to be 2025. Tesla was in the same window for about 4 or 5 years, and now Tesla's starting to make a breakout because of again, Trump becoming president, and then that means that we could see more contracts, and we can see Tesla getting its way more when it comes to full self-driving approvals and things of that nature. We could see, like I said, we could see some improvements there with Tesla. So with that being said, Tesla, it looks like it has really heavy resistance here and I'm looking at this area. Let me crunch it up. So actually on the day, I can make this easier to look at with the week. All right, so looking at the week, it looks like, again, we have this level right here at about 325, and you can see that we even rejected. The stock went all the way up. It actually broke above 125. I think we were about at 128 on the day, and then it pulled back down to I said 128, 328 on the day, and right now we're at 321. So we broke the high point at 300. And again, 325 looks like the point to beat. After 325, you got about 350. After 350, it looks like we may have a struggle around 375 to 400, because 375 to 400 is the range in which Tesla, when it was running hot back in, 2021, the best year it's ever had, it was starting to peg out at about 375, 400. So Tesla could be at all-time highs if it can break the 375, 400 range. Do I think it's going to get there? I think it's going to get there if it can sustain this momentum. Again, with Trump being president, I know Elon is going to have some say so on certain things. I don't know how much say so he's going to have. I mean, with these things, people can say one thing and do something else. So we have to see how this actually impacts Tesla bottom line when it comes to revenue and earnings. Like, are more people going to buy Teslas? Or, it just depends. We have to see how that works. But I do think Tesla could easily go for 350 to 375. Again, once we get to 375 to 400, that's where we may struggle a little bit. But I'm thinking that within the next, and again, this forecast that I'm saying about 375, 400 is within the next, I say by the end of the year into the first quarter. Now by the summer, Tesla could easily be $500-$600 depending on the contracts they are awarded and how the full self-driving things go as far as the government. So we'll have to see as we hear more plans about Tesla. But right now, Tesla's on a hot run, and I think Tesla's going to continue to run again until we get near those all-time highs. And once we get there, we may stagnate a little bit, and then eventually I think they're going to be broken. But that's what I'm saying for Tesla in the long run. If you're thinking about the short term, you can look at the 4 hour, pretty much maxed out. RSI is at 84 on the 4 hour. Again, you can see that we broke this former resistance, which is now support, and then we're testing a high. So if you're looking for a good point to get in at Tesla, honestly, if you're looking at a good point to get in for a long run, I would wait for Tesla to calm down and come back down around 315, 300 for a move back up, because it went up too fast, and eventually it's going to have to come down and cool off. And once it cools off, I think, again, that would be a nice place for an entry. But on the 4 hour, you can see that everything is popped to the upside, 84 on the RSI. The MACD is going crazy. Like, this is it's in a crazy buy trend to the upside. And then you got that stochastics again, which is our momentum indicator. It is pretty much maxed out at 100. Can't go any higher. So two things we're going to see is some stagnation and a slow, I can't see us getting another 8% day on Tesla. Not right now, until it cools down again, unless Elon Musk comes out and says that the robots are going to be ready sooner than expected, and also they have the 50K Cybertruck ready with a whole bunch of other, it would take a lot. But I think right now this is just momentum from the election and the fact that Elon is getting a new role, and investors are saying that that's a great thing for Tesla. So that's what I see for Tesla in the short term, also in the long term. Do I have any questions on Tesla? Cool. All right, let me see in the chat. Tesla 500 plus. Elon going to juice government contracts with Starlink and SpaceX. Oh yeah, yep. I agree, Ross. So yeah, we could see Tesla for 500 down somewhere down the line. How fast are we going to get there? It depends on what we see in a news cycle. I don't think it depends heavily on technical analysis because again, the pump that we're getting right now is all based on news from the election. So again, I will wait for a cool down. Place my trade and just sit back and relax. Any other questions on Tesla? All right, cool. Next stock is NNE. This one is a nuclear energy. So if you've been trying to play nuclear energy stocks, this one has been running on the year. Most of the nuclear energy stocks that I've been watching are up at least 85% on a year. Nano nuclear energy is another one to add along on that list with CEG. CEG is Constellation Energy. They have deals with Microsoft. If you haven't been up on the news with Microsoft have been buying nuclear power plants pretty much and making nuclear deals to power AI. And that's why we've been getting a run on nuclear energy. So right now, looking at NNE, which I think is one of the cheaper names at $22. It looks like we have a pending MACD crossover to the upside, which is looking really nice. We also have a 58. I know I like 45 to 55 to the upside on the daily. I think a 58 is fine. May have to cut it short at about 65 to 67 when I get out on the trade. But a 58 RSI is fine in this case. We also have stochastic showing at 48, which is nice because we can go all the way up to 80. And then if we break 80, we can hit 100 as far as momentum. So MACD crossover to the upside, fair RSI, stochastics looking nice. This could be a nice swing trade back up to 30 and beyond. And the reason why I'm saying 30 is because we've charted this out before. And you can also see back here that when the stock was running on a high, it got all the way up to about 37. 32 to 37 a few times before pulling down. And now it looks like we're going to retest that around 29 and move higher. So that's what I'm watching here is a break at 30. And I'm actually looking at some option plays to play that to the upside. Let me check the 1 week. Don't have too much information on the 1 week. Again, this is a fairly new stock. You can see back in May of 24 is when the stock became public. So we don't have too much information on the stock. So trade with caution. But I do think this daily setup is pretty nice. With the fact being that we could go for another retest at about 29 with that nice MACD crossover. All righty, let's move on to Microsoft. All right, so Microsoft is one that I've been watching for a while. They just had earnings, which was kind of the earnings went well in my opinion. I kind of knew that they were going to be earnings. They're Microsoft, so I wasn't too worried about that. The biggest thing I was worried about with Microsoft is the forecast. What do we see moving forward, right? And I think that now with the earnings out the way, I think that we're eventually going to break out of this consolidation. Once we break out of consolidation, I've been saying that I'm ready for a test at 450, and we've just been chopping here. So it looks like we could get that test at 450, but we need to be above 525. I'm sorry, above 425. If we break above 425, then we're set to break that 435 that we've been rejecting so much. And once we break that, then we can go ahead and test that 450. So 450 is what I have for Microsoft. This one I'm just being patient and waiting, but you can see the consolidation building up before the breakout to the other side. All righty, that's what I'm looking at for Microsoft. Again, I'm watching this one on the weekly, not so much on the daily because it is consolidating, it's moving pretty slow. But I think once it decides to tick to the upside, that we should have some momentum following that one. I have Microsoft on here twice. Let me take that one off. All right, my last one is Transmedics. For those that know, I love this stock. They had earnings. They did drop after earnings. They had a big push to the downside. They were at about 130 after earnings. They came all the way down as low as $80, which I think is a steal. the reason why they fell on earnings is because they missed on both earnings and revenue. But the reason that they missed is because this is a newer company and they've been investing some of the money into their fleet of airplanes. And if you don't know what this company is about, they deliver their machines. Their machines are used to keep organs alive and give them readings and things for donors. But then they also have airplanes that fly around the machines, all around the world. So I think that the investment that they made was smart. The pullback is a steal and a deal, in my opinion. And I think that anytime I see a stock that I like under a 30 RSI, this is a 25 RSI on the daily, which is crazy. I'm looking at accumulation and just grabbing a few shares for the run back up. I think that on the run back up, we could be looking at about 120 to 130 again before we move higher and test the 140 to 150 range. So right now, I'm just looking at accumulation at the bottom. It looks like it's already bottomed out around 80 to 85. And so eventually, once it moves, I'm looking for a fast-paced break after 100. But until then, we should be moving a bit slow, which is good for people who want to consolidate. Who want to build a position in their portfolio with this stock. So that's what I see for Transmedics. Again, I think it's a steal from their earnings. Knowing the reason why they pulled back was very helpful for me. And I'm going to grab a few shares for sure at some point this week. And that is the last stock. What time are we at? We are at 7:56, which is right on time. Let me check the chat. Vol is low on NNE versus SMR with strike expiration. Again, if I'm looking at NNE, I would go in the money. It's a very, very volatile stock with nuclear energy being in a volatile space right now due to AI. I would go in the money. It's a $22 stock. I would go in the money and stretch it out for a few weeks to a few months, just depending on how much ever I'm trying to place on the trade. But I think going in the money would be the safer trade. And if you wanted to go out of the money, I wouldn't go anything higher than 25, in my opinion. Right now it's at 22.82. It just moved 5% Friday, but I think anywhere between a 20 to 25 strike. Again, and you may want to add some time on it, but I think that that would be a nice setup for a play up to about $30. All righty, I'm going to go ahead and stop sharing my screen and stop the recording. A second here.